Hello everyone and welcome to Day Trader S&P 500. Today is September 26, 2021. It's a Sunday night and I want to take you guys into our latest report, which is kind of what I've been doing here lately, a different approach. You can see our Friday report there, short-term report, goes to monthly subscribers of Woodson Wave Report newsletter. And you can see here what we've got: market at critical juncture, primary, alternate, bull wave counts. Okay, so let's show you guys what we got going on here. First, we'll go with the primary count in black. The all-time high was September 2nd. We have a 1, 2, 3, 4. It's in black. 5 down. By the way, we've had an unbelievable amount of direct hits on our price and time targets. But anyway, I didn't label them all. There's just not enough room on here, honestly. So that's wave 1 down in black. Then we have an A, B, C up for wave 2 at the 923 high, which was the turn date. And that's 44.65. Okay, that count needs a move below 43.05 for validation. Okay, the primary count, if this is 1 down and this is 2 up, then 3 needs to go below the wave 1 low. Where are we wrong? Make or break 45.45 right there. There's a 786 target. I'll get into that with the actual charts. Alternate count, a series of 1s and 2s in red. A 1 down, yeah, you can count this 1, 2, 3, 4, 5 there. A 1 down, a 2 up, another 1 of 3 down, another 2 of 3 up. So this count needs to hold below 44.85, which is up here. Okay, right there. That's what that needs. And then a drop below 43.05, the wave 1 low. It should be a wave 3 of 3, so a third of third wave is the most powerful. There's our targets for this third wave. It's the 1 in a circle and the 2 in a circle, and then the 3 in a circle. For you technicians, that's minute degree, okay? And these are all sub degrees of that subminuet or minuet and subminuet. Anyway, the bullish count, okay? Bullish count counts this as an A down, a B up, and a C down, end of decline, okay? It needs a move below this low for validation. A move above the 45.45 high negates that count. So we got something for everybody, okay? So if you're a bull, what do you need to see? You need to see this low hold, 43.05, and you need to see a break of 45.45. If you're a bear, you need to see this low broken and this high hold. Okay, we have higher highs, lower highs holding at different degrees of trend. So while we had that break last week of it was a wave 4, that told us it wasn't wave 4, that made these counts come to the forefront. Okay, let me get out a chart here. Let's see. Like I said, these go out to all of our monthly subscribers. Want to let you guys know about our subscription services there. You can see what we have to offer. Also, our disclaimer and our awards over the years are right there. And also want to thank you guys for subscribing to the channel. Remember to hit the reminder bell so you get alerts, and the like button, which did a no-show again. So do we have a simulated? There we go. It looks like that, only much smaller down there below what we're doing. Okay, I got off track here. Let's go to our charts if we can. We're going to look at a daily chart of the S&P. What we're looking for is a correction of the pandemic low from March of 2020, March 23rd to be exact. We have a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. All right, we count a completed 5-wave pattern from there. Could we be wrong? Yes. When do we know we're wrong? A break of 45.45, September 2nd high. Okay, I think I have that on log, and I don't know that I should. There's our targets there. We got a 36.48, a 33.69, and a 33.90. Okay, I want to get to a smaller time frame. Here we're looking at, that's at the August 19 low. That was the most recent 5-wave decline. And there's our 1, 2, 3, 4, 5. We needed validation. We needed a break of this August 19 low. You can see we got it back it gapped through it, and there is the September 20th low, and you can see we've got an ABC up. I want to, by the way, the next low we want to take out is this July 19 low, okay? So as we keep taking out the previous five wave advances, that tells us it's a higher degree of trend for a correction. And I think I mentioned that, let me go back into the actual newsletter. I mentioned in there to our customers that retracement was a perfect, 618 from the June 18 low. Let me see if I can get that in here. Let's go, let's just go back. Bear with me. I want to show you guys what that looks like. That would be the June 18 low there, right there. And let's do the Fibonacci retracement of that rise. Let me find it again. There's June 18. I don't have a wave count that starts there. You can see, let me wipe out that 786. Let me get in there, remove that. There we go. There you go. For you bulls, this could be a ABC, or ABC if it's a correction over, and here we're starting a new wave up. We get validation with a break of the all-time high. There you go. Okay, I wanted to show you guys that. Remove that. Let me get back into this hourly count here. Okay, so in our primary wave count, where the 45.45 high on September 2nd is the all-time high. I want to make this bigger, make that bigger. There we go. I want to show you guys this retracement of the first wave down from there to there, and that's why I had it in there, because it's sitting right near the 618. So I want to show you guys where the 786 is on this second wave up. Okay, so we have to allow for a move up to the 786 retracement for wave 2, which is 44.93. The make or break, where is it wrong? Where is it not a second wave? When it retraces more than 100% of the first wave, which is 45.45 high on September 2nd. There you go. I wanted to show you guys that. If this holds, let's get that, extension for a target for wave 3. And there's 1 down, and there's 2 up, and there's 3. 3 equals 1 at 42.23 and 40.73. I think that might all be in that chart here. There we go. It's off a little bit by a couple because I didn't get it right on the edge there, but that's what we're looking at, okay? So that's what everybody needs to see to make themselves happy. All right, let's move on. I think I wanted to get down to one more degree of trend. Yeah, and here is that wave count for the bulls I have in red here. There's a 1 up, a 2 down, and then we've got a 1, 2, 3, 4, 5 for 3, a 4 down, and a 5 up. This 1 high would have to hold here. Okay, 43.94. So this 4 cannot go below that 1. There it is right there. All right, for you bulls, that needs to hold. As soon as that breaks, it's not 5 waves up. Of course, you need a break of the wave 3 high for wave 5. That high is 44.65. So we're looking at that being taken out, make a new high, and then you can count 5 waves up. Okay, let me move 4 back up there. There we go. And let's see, was there anything else I wanted to show you with the S&P? For some reason, I had this out, but this is a time spiral I started. We'll talk about time spirals next week when they get a little closer. The next ones, the last one was 923 in the current time spiral. This is one I started in 1999. You can see it caught the 55-day low, and then it caught virtually every top, every high, every turning point high was followed by a long decline all the way up until 2006. It lasted 7 years. We'll get more into the time spirals later. Did I have anything else I wanted to show you guys? I think that's about it. I want to get into Tesla. Here's a daily chart of Tesla from the January high of 900. There is 1, 2, 3, 4, 5 in black down for wave A. Corrections are letters. Impulse waves are numbers. So that would be an A down. We're looking for a B up and a C down. There's a chance that this could be A, B, C up, and then 1, 2, 3, 4 down for wave C there, okay? let me just, it's got to be here somewhere. There's a chance that could happen, and the bear market ended right there at the double bottom. I think I'd mentioned that in a previous report. We haven't done Tesla in a while. Let me just show you guys so there's no confusion. That would be a, come on over here, guys. There's the B. This is the bullish count. And C, that would be B up there, and that would be C down here. And then we'd see a series of 5-wave advances. And what made that negate was if this A, call that a 1, and that B is a 2 for the bullish count, this would be 3. This 4 overlapped. Okay, you can see the overlap there. I've got the dotted line on the A, or what would be in a bullish count, the wave 1 high. 4 cannot go below 1. 4 low can't go below wave 1 high. So on one condition it can, if it's a beginning diagonal triangle. Those are rare, but it's possible. So we got to leave that option on the table. But otherwise, this looks like a complex triple 3, if you will, correction. And I think it'll get up to the 786. Or we were saying earlier that it could go to the A wave high. Let me change all this back. I wanted to illustrate that to you guys for that possible count. Okay, let me get this back over there, the C over there, and the A here, and the B back here, and the C down into the distance. There we go. Okay, so we got a WXY, ABCX, ABC with a 5-wave ending advance. I was saying that it'd be a nice for a double top at A. Double top at A is at 780.79. This most recent high here, this is a nice advance, is 774.80, so it's very close, and it's sitting right by the 786 retracement of 808. Okay, so that's what we're looking at. The bears need to see this ABC hold, so that we need to see, for the bears, they need to see the 780.79 hold for the double top, or the 786 retracement at 808 hold, and then a move or a collapse down in wave C. The bulls need to see all these lows hold. Okay, this one down here at 648, and then ideally this one down here at 546.98. Okay, so we'll see if that's a new advance in an impulse wave up or not. But really nothing's changed. It's when Tesla became in the S&P, it got a lot more tame. All this was unbelievable going into there. Okay, we'll see where it goes. But we have our parameters both on the up and the downside. I wanted to touch on the US 10-year. Okay, you know, back in the pandemic low, March of 2020, interest rates ended a 39 bear market in rates and bull market in prices. Okay, so there was one up, there was two down, and we had a nice 1, 2, 3, and a 4 here. I'll probably break that down. I think I wanted to show this because we hit an important target. Okay, so from that 2 low, we have a 1 down, a 2 up, a 3. I'm sorry, a 1 up, a 2 down, a 3 up, and here's 4. And there's the targets, and there was the perfect Fibonacci 50% retracement target, and it hit it. And then let's break that down. What is that date? We'll get a little closer. That's too big. August 4. Let's go from daily to hourly. Okay, and get into August 4 here. Bear with me while I extrapolate this out to the August 4 low. There it is. This is a little better. Let's widen that up if we can. Okay, so from that August 4 low, which should have marked a wave 4 low, we need another move up to 5 high. There's 1, 2, 3, 4, 5. There's a correction. There's A. There's B, double top. And then C, well, I might not have that in the right spot. But what we had is a move up to this 1. What is this 1? Is that my 5 target? I haven't looked at this in a long time. Oh, no, that's where wave 1 equals wave 3. Okay, let me put that in here. There was 4. We're looking for 5, and I don't have 4 marked there. So, yeah, this is 5 waves up for 1. I'll put a 1 in there for you guys. Okay, at a higher degree of trend, I'll have to change that. There's a 1. And if that is C, well, we'll do it from here, okay, because that could have been impulsive. From here, 3 equals 1 there, 4, 5 right there, or a 1.618 at 1.619 interest rate level, 1.466, okay? We'll see how that plays out. That could be the end of the decline, and this could be a new wave up. But anyway, there's an important one there. But the biggest thing to note is that it's the bear market and interest rates ended in March of 2020, and the bull market has begun, and interest rates are going to go higher and higher and higher and higher. Who knows if they'll go another 40 years like the bear market did, but there's our extrapolated out targets there. Let me get rid of this and get a target for this bigger wave 5 if wave 4 is over there. I'm going to move these out, okay? Like I said, I hadn't looked in this for a while. If that's a 1 and that's a 2, then we have a 1, 2, 3, 4. So we got to get a target for 5. Let me get an extension in here. Okay, from that wave 1 low, there's 1. Let's see what 3 did. Yeah, 3 is a little more than 1.618. And the 4 low is right in here. There we have a 5 target at, oh, there it is, 1.61. No, I'm sorry, that's not it. It's, what is that target there? 1.622, and then a 1.923. That's interest rates, 927, okay? 1.927 and a 1.622. So we're not quite there yet. And of course, 5 has to go higher than 3, so take out that 1 to 1. We need to go up here to 1.923 because 5 has to be higher than 3, okay? So that's the targets there. Sorry for any confusion. Let me see what else we have here for you guys. I think this one is enough. This has 3 different wave counts. We've got make or breaks upside and downside for each scenario. We'll see how it plays out. Like the title of the newsletter to our paying customers to Woodson Wave Report says, critical juncture, primary alternate bull wave counts. We'll see which way it goes, and we'll see if that Fibonacci time spiral of September 23rd holds or has any slippage from where it is now. And we'll get into the time spirals in the next week or so. Okay, thanks again, everyone, and until next time, take care, everyone.